Thank you for being here. And Senator Harbison, could I get you to say the prayer for us, please, sir? You're number 14. Thank you, sir. I appreciate it.
If you bow, Father God, we thank you for the blessings of this day to get it right once again. Thank you for giving us open minds to deliberate for the people of the state of Georgia in a justly, godly way. These things we ask in Jesus' name. Amen.
Thank you very much. All right. We have, we're going to see SB 230, Senator Steele, and then I have a bill, SB 324, and Senator Kirkpatrick will take over. And then SB 503 is going to be next week because there's some people that need to be here that were not able to make it today. So Senator Steele, we'll let you want to do it from right there, sir?
Yes, sir.
And this should be fairly easy, I think.
Thank you, Chairman. Yes, we're working off LC 461447S. We do have the right one, and it's so exciting to be able to work off the right one, you know, and you got to shake off 11 months of cobwebs sometimes when you look at these bills. Page 1, the same. The language change from our amended version from the 2025 legislative year changed, rather than just not having any cap at all, we changed line 29 to not exceed 5,000, changed that to 25,000. And then as a very welcomed and appreciated addition, we added the amendment, the language that's in lines 33 through 38, which has to do with notification. And I believe that this satisfies the questions that were being asked in committee. There were certainly a lot of questions because we didn't have the language in there. I knew that we had, but as I said, we were a little slow to catch that we didn't have that version in the folder, so I apologize for that, but happy to take any questions if anybody has any.
Thank you. I'm trying to understand this complicated structure. So what I understand now is that if the insurance on the shell, the common areas, whatever, that deductible is what we're talking about raising from 5,000 to 25,000.
Correct.
Good so far?
Yes.
Okay. So then if I'm the condo owner and something happens to the shell, I've got insurance on my
Individual
unit,
policy.
on my unit, and let's say I have a $1,000 deductible or whatever, then would my insurance policy pick up the remaining part of the deductible for the, am I saying that right? For the 24,000.
As someone who does not write insurance, that is my understanding as well, is exactly what you described. We do have two agents sitting right here, I believe, can answer that from a real world experience.
Want me to take it, or would you like to take it?
I'll try to.
I will let my illustrious vice chairman and pro tem answer the question.
So I first want to have a disclosure that I sell very few condo policies where I live, and they're called a HO6 policy. And my understanding is the policy is going to indemnify the insured. So the HO6 insures from really the sheetrock in. Right. So any changes the insured made, any like enhancements to the cabinetry or plumbing or whatever, I mean the plumbing fixtures, etc., and their personal belongings. But there's generally in these HO6 policies, I think there's it kind of mirrors, it gives extends coverage for assessments or for really kind of mirrors the deductible of the master HOA policy, so that there's not a gap for the individual HO6 policy holder. So because our law restricts that deductible in code to $5,000, even though the HOA might carry a $25,000 deductible. The HO6 is not gonna bridge that gap. If we remove the 5,000, or if we put it at 25,000, then it will then mirror the HOA policy and indemnify the individual condo owner. I think it's a good measure, but again, I have to tell you that I'm not an expert on HO6s, because I just really don't, in my areas, we don't have a lot of condos.
So, yeah, just to finish up my train of thought. So if my deductible is $1,000 and the deductible for the homeowner association or whatever is $25,000, then you're saying that she would pay her, or I would pay my $1,000, and her insurance company, it's my daughter, that's why I'm asking that. The insurance policy for the HO6 policy would pick up the remaining portion, which would now be 24,000 rather than.
Yeah, that's my understanding. So the HO6, the $1,000 deductible that your daughter has is on losses to her property.
Right.
This is talking about losses to the whole complex, or that, that building where the owners are responsible. Then it mirrors that for those kind of losses it's my understanding. So if we have it capped at 5,000, that's all the insurance company, they're gonna not pay the difference between the 5,000 and the 25. But if we remove that or raise it, then it would pay the full for that individual. That's my understanding. Does anybody?
No, that's correct.
Subsequent question, a follow-up to that would be, if we do this, would it have any impact on the premiums for the existing HO6 policy, since they're now going to be liable for an extra $20,000 if there was a shell damage in replacing it?
So my intuition is, if it had any, it would be very nominal, but I don't even know that it would have really
I
hardly
mean,
any.
somebody the other day said that you've got water damage limits that are different now anyway than the 5,000. So there was already coverage for that.
That's
and
correct.
it shouldn't.
This is for
I just don't want
fires.
to do, we're thinking about unintended consequences.
I mean, a HO6 policy, the ones I've seen, I mean, they're $250 a year. I mean, they're, because, maybe on the coast, they're probably
Condos in Perry.
In Atlanta, they're probably more than that too.
If I could speak to that. Just like with a healthcare policy, when you have a higher deductible, you usually have a lower premium, so it's going to have the same effect on that. The models show that this would bring the premiums down by having a higher deductible option, because they can't find insurance at that.
Well, for
low
the
deductible.
Premiums
big-
down
for the-
on
for the big
on the
policy.
shell
For the big
coverage,
policy.
on the shell coverage.
Hang on a second. Senator Harbison?
Yeah, if I may, Mr. Chairman, and going back to President Pro Tem, the whole thing, this HO6, how does that fit in as opposed to what the comparative have? Is there such a thing as HO6 and now that's will not gap between what the $5,000 is, and that's the problem, to the 25,000? Is that the problem?
Yes, sir.
I just really have a problem. I know that the homeowner association represent the homeowners, but it seems that some kind of adversarial thing there. What if we don't pass the bill? What happens? And I don't want to hurt anybody's business. I'm just saying, what if we say no?
So this is my understanding, because I did deal with this bill last year too when I was chairman. So the master policy for the whole property
Right.
that is commonly owned by all the condo owners
Right.
is, they're telling us that they're unable to find any coverage with a $5,000 deductible.
I understand that.
It's not even available. And so they're having to buy a higher deductible. And the fact that when you do end up having a claim and if it's a fire claim and the insurance company realizes that Georgia code limits the exposure for the individual on that claim to $5,000, and then the master policy is at 25, you got this gap of $20,000. So then they have to just basically assess to recoup that $20,000, because you're all in this thing together. It's
I
like
got you.
being in a partnership when you are on a condo. So they've got to recover that money, and they just assess all the condo members, even though it might be something that just happened to
In
one
one
building
area,
or one
right,
unit.
right.
So everybody has to then share. It's a partnership, and it's just, I think it makes sense to have the insurance company on the HO6 pay more, rather than having it assessed across the whole body of people that
But
are.
consequently, the homeowners pay more too, right?
Well, I used to own a condo.
You said used to.
The homeowners pay one way or the other.
Yes.
Because it's like a partnership.
Yeah.
So if you are paying higher premiums because trying to have a lower deductible on the master policy, that's spread among all the homeowners. If you can get a higher deductible and save money on the premium, that savings is spread over all the homeowners.
I get that part.
This is a
Right.
gap that the HO6 would pay, the insurance company on the HO6 would pay that gap were it not for this in our code, is my understanding.
Well, anyway,
I don't- I mean,
think
it's hard to
this-
explain.
It's just really, I just get a feeling about that.
So we're not
It's
talking
just-
about renters,
I understand.
we're talking about
understand.
owners.
I understand.
These are all partners, they're all owners.
I understand the difference, right? It's just, it's just something about it. It's just, but anyway, I yield, Mr. Chairman.
Okay, I have a question. So we're back to this HO6. Do we know like what their limitations are? Like if the homeowner has this HO6 policy, let's say it is capped at it's $10,000, right? Do we know what the limit is of the HO6 right now? Like how much is that amount? Because where I'm getting at is, what if the HOA deductible, we're gonna raise it to 25, but let's say the homeowner's HO6 only covers 10. That homeowner's still gonna be out, what, like 15? So
I don't think there is a limit on this.
that's what I'm trying to get at. Does the HO6 have some type of,
There's a limit on your personal, like if you buy an HO6, you have to say, I want to insure my personal property.
Got it.
Under an HO6, and the value is $25,000.
right, so it could be more than 10, and, yeah,
But then there's another coverage in that form that gives coverage for commonly owned property, and I don't think there is a limit.
okay, that's my question.
And the limit is in the law, but what the restriction is we have in code that it's,
And I'm talking about the HO6 coverage. You're saying there's not really a limit, like it's not like 10,000 and that's it?
I don't think so,
Can so,
but
is it 100,000, like what is
I
that?
think we have.
I don't,
We have somebody,
Wanna speak?
Michael, you want to speak to this? Because they say you know all this information, so we're gonna ask you.
I wish I knew more about
Okay,
how to.
Yeah, this is new information.
okay.
Thank you, Mr. Chairman. My name is Michael Shelton, and I work for McGuire Woods Consulting, and we represent CAI, which is the Community Associations Institute, which is essentially a association of homeowners associations. And to answer Senator Barrett's question, I'm not an expert on insurance, but if there is a limit, the limit would be fairly high on an HO6. Okay.
Yeah. I'm gonna give you just kind of my side, because I do some of it. Usually an HO6 has a limit that is stated in the policy for assessment. So if I've got 10 units and I have $10,000, each one of them are assessed $1,000. So what I would say is, I say this to each one, they're different among companies. So State Farm, Allstate, Chubb, whoever may have a different limit for assessment coverage. But what's happened is that because the condo association can't buy the $5,000 deductible, just the market won't do it, that's why they're asking for the raise. And then each individual condominium owner needs to look at their policy for the assessment, and that would be the part, and I will say this, most of the condo associations that I see let their members know that you need to cover it for a certain amount because they know that that's gonna be the maximum. And that's usually how I've seen that work in the past, and I didn't mean to kind of jump in, but that's how I've worked them in the past. Does that make
No,
sense?
I lived in a condo for a lot of years, and you're correct. And not only will the condo association let you know, but if you have a mortgage, your lender's gonna require that as well.
Yep. The banks do a great job of that. I'm gonna ask, because he's blinking over here, Senator Hodges, you have a comment on that?
Well, yeah, usually, I mean, if the bank finances a condo, they're gonna make sure there's a master policy to rebuild the condo if it burns down, but I don't think that banks require an HO6. Did it? Okay, I
Yeah.
mean, I guess it would depend on the bank, obviously, but I mean, when you think about what the HO6 covers, furniture and floor covering and, I mean, that's not really the banks anyway. The banks is the building. It's and the common areas and everything that I bought when I bought my condo and got a mortgage on it. My question, though, that I was gonna ask after addressing your concern, is there any research or is there any knowledge of how many condominium owners don't have HO6s? Because if you don't have one and you have this problem,
As a whole, what I've seen is part of your condo association rules and regs, to be a
Yeah.
member, you have to provide
it-
evidence that
So-
you have coverage in place in order to be a part of the condo association. Like a homeowners association, many times will require that. They're not only concerned about property, they're concerned about liability, that if you have somebody fall down your steps, they want to know your policy is going to respond liability-wise, and then the property is.
I guess it depends on the condo docs.
Yep,
right?
it does.
Okay. All right.
All right. Okay, one more.
For instance, every instance such as this right here, the board of directors would have to vote to approve. The people would have, the homeowners and the board would have to vote to make this particular move anyway. Is that correct? Is that a fair question?
Yes, well, the board is gonna be charged with going and negotiating the master policy. So, they're gonna, and the members would elect the board.
Okay, all right. What is the committee? Any movement from the committee?
Make a motion to pass LC 461447S.
Okay, so you have a second? Senator Hodges, any further questions, discussion? All in favor, raise your right hand. All opposed, raise your right hand. Okay, we got one negative, you got that? One positive, we got 6. 1, 2, 3. Is that right? All right, you got that? All right.
Thank you, Mr. Chairman.
Thank you. Thank you for stepping in, and Senator Steele, Sean, I'll get it right. Senator Steele, you are on your way. All right, the next one is actually mine, and I'm going to ask our vice chairman, who is very qualified to be able to take over the chair to run things for a while. Is that fair? Yes, sir. Okay, I'm gonna take my stuff with me and phone there.
Bear with me just. All right. Our chairman is gonna speak to Senate Bill 324, and it looks like we're working off of LC 52908S, which should be in your folder.
We got that. let's see. I'm looking 520967S, let's see, hang on. Okay, it's. there's
9008S.
8S, yes, okay, he's made just a little change. We made a change there, okay.
All right,
I've got a copy right here.
all right.
I just had the other one highlighted, and we made a date change as far as that portion, so that's
The
what it is.
floor is yours,
All
Chairman.
right, thank you for the floor, I appreciate it. This is a bill that we've passed out of here a couple of different times, but this has got some amendments to it, or changes to it that I think are interesting. I titled this as a policyholder bill of rights, and life insurance is a different insurance from any other insurance that anybody has, because it's for life. It's not just for 1 year or 2 years. You can change auto, homeowners insurance, and it really doesn't matter but a life policy is usually for the life. If you will look at page 2 and look at page item 26, here's one of the things about it that we see happening. Life insurance companies get sold. Companies change names, things of that nature. Well, this case, I want to show you, if you look in your file, there's an Exhibit 1 and an Exhibit 2. In 2011, and this is an actual policy that I sold, 2011, I sold a policy with the Hartford Insurance Group. Hartford Insurance Group's known very well, everybody, but Hartford sold the Hartford Life Company to another company called Telcott. Well, what happened, if you look at this, Exhibit 1, you see in 2023, they sent me an annual statement and an annual report on that policy, which I had been used to getting every year with the Hartford. Telcott takes them over on Exhibit 1. You see that I'm there, the date's there, and all. Then I come to the next one, Exhibit 2, and April of 23 or 24, no longer is my name present, but Telcott's service center is present. Now, what's interesting is that if I make a call to Telcott, Telcott will not tell me anything about the policy. They will not allow me to run anything, run any information. They will not talk to me at all about a policy that I sold 11 years ago. And the client has no one really to represent them, or the policyholder has nobody to do that. So what's happened here is the company has been sold, and that's where you see that, and they've changed the servicing agent, and I no longer can get any information on a policy that I sold 11 years. I can't represent the client. And that is, in my opinion, not a good situation. So if you look at the first one on 26, it says the policyholder has the right to retain his or her original agent of record for a policy, even if the insurer sells or transfers the policy to another insurer. So that my client here should have the right for me to represent him if I want to represent him. And currently, that's just not true. They cut you off completely, and I have to get the insured to request information, and I will tell you that you have to sit on hold for 20 or 30 minutes sometimes to even get through the service center. That should not be, and that's where I think the first right is, that you should be able to have representation by a licensed insurance agent in that respect. And so that's the first part. The second one is on line 30. The policyholder has a right to receive important insurance policy documents, including company illustrations, projected values, etc. If you look in here, there's a policy that was written with American National Insurance Company. This policy was written in 1966. It's a 20-pay life, was bought by a grandfather on his daughter, and his daughter is the beneficiary. This policy, he was dead for 15 years. They found the policy in his stuff and said, is this policy in place? Well, it was a 20-pay policy that no annual restatement that we can find was ever being sent at all. And so what I had looked at is that in this portion is that you would have the rights to get a report annually driven, understanding that it's probably not going to change because it's a paid up policy, but the company still should have the responsibility to let the policyholder know that it exists and that it's there. Interesting, this one, this actually was on, one of the ladies that works for me found the policy, and it was on her mother. Her grandfather had been dead for 15 years. And so that's a part that we see for older policies. And I just think that the company needs to be able to do that. And we have ways to find names and things of that nature. The next article, or next thing you'll find in your folders, is a news release from NAIC. This is the National Association of Insurance Commissioners. They have done a great job of helping us in some ways of what we call a policy locator. Here's the part I always ask someone: do you know what policies your mother and father have in life insurance? Some of those could be paid up or otherwise. Well, the National Association came out and they did a great job. They created a website. In fact, you can go to our commissioner and link into it. You can find the National Association website for Policy Locator. And when you click on it, you can actually put data information in that's there. And that data, there's a sample of what you're required to put in, is there's 3 pages. And so what happens is they search the database and come back and say, hey, we have a policy. I had a client that had a $150,000 policy that we found that was on the person that nobody knew anything about. Understanding that with life insurance, the beneficiary is required to file the death claims. So this is in place, but what this does, the National Association has no authority over the states because the states are ruled state by state. I have a letter, and you'll find also in your file that I had, and this is 21 and it's not changed, from the Insurance Commissioner's Office. There's currently no requirement in Georgia law for life insurers to review the National Association of Insurance Commissioners policy locator. We believe only 4 states in the nation have mandated this. However, there is a legal requirement under the Unclaimed Life Insurance Benefit Act found in OCG 332514 for life insurers to check the Social Security death master file against their in-force policies on at least a semi-annual basis to identify a potential death master file matches. So what happens is they get the Social Security death benefit list. They know their insured is dead, but contractually the beneficiary has to be the one who files the claim. And if he does not know about it, it's very hard. Now the insurance company has a period of time in which they can do it, and if they don't find it, they send the check to the state to unclaimed property. That's where some of this ends up. What I have proposed, if you look at line 38, the policyholder has the right to beneficiary protection. The insurer shall conduct a search of the National Association of Insurance Commissioner policy locator systems at least quarterly, no later than January the 1st of 2027, and annually thereafter. Every insurer that reports to the commissioner these results that are searched, the commissioner will put that in place. So what I'm asking is this, is if you're a life insurance company that does business in the state of Georgia, you at least look at the search engine that is provided by the National Association, and that the state is requiring you, if you sell insurance, to search for the policy. Because if not, because they match it with the Social Security death benefit list, it's then going to go to the state to unclaimed property. And I will tell you that I've worked with this. There are clients that have policies they don't know exist, and I'm saying more and more, it needs to be required by our law that our companies that do business in our states check that locator that's put in, and the commissioners probably would do it, but they don't have the authority to do that because each state is governed by the state that it's operating in, if that makes sense. I've worked with this, helping people find policies on especially older people that are paid up is a real challenge. And I think this is that this at least operates a framework. I will tell you that if you go back about 6 years ago, Florida had a settlement of about $7.5 billion, in which the insurance companies knew they were dead, but no notification was given. And even some of those policies would lapse because after 6 months, the bills and all, get returned from that standpoint. But I will say this, in the industry's defense, what we are seeing on new policies, we are seeing third-party notification. This one that I showed you that was written in 1966, had no address, no social security number, no date of birth for the beneficiary. So it was really, it's harder to find. But I think that at least the ability to search that, if that's your mother or father, and know that the insurance companies in the state of Georgia are at least required to look at that and report annually back to the commissioner. I just think that our policyholders have a right. The one that really, and I say bothers me, is when a company can be sold. I will tell you, I wrote a letter last year to the president of the company. I got no response, just asking for that, because I do think that my client in this case had $100,000 and $1 million death benefit, and it also provides a long-term care benefit to him. I need to, if I sold that to him, I need to have the ability to know that what's going on and to just turn off that. A lot of times, not always, a book is sold only, they're not selling any new business. They're just we call it runoff, and they're just letting the policies lapse. So I just believe this is a consumer bill. I believe that the policyholders of Georgia, my clients, and all the clients in the state of Georgia that are represented need some protection from that standpoint, and that's a part of my bill. And I hope y'all don't think I preach too much. I figured.
All right, we got some questions. I think the first one I saw lit up was Senator Kirkpatrick.
Chair, first of all, I was going to thank you for being so persistent, because that letter's from 2021, and I'm glad that you're staying with us, because some of us have dealt with this in our own families, not knowing where the policies are, bank accounts, things like that. And I was going to ask you, isn't it true that that's why we have $8.8 billion in Georgia unclaimed property? Isn't that a big contributor? But you answered that. So the only question I have is, people move around, so they may have bought the policy in another state and then they end up in Georgia. How does that work? Are there other states that are doing the same thing?
At the time we did this, there were 4 states that had done it when we had seen this. But here's the part: they key off of Social Security numbers, and if you put the data in here, most of these companies are multi-state operations in that respect. The way we've drawn this is that if you are a Georgia company and do business in Georgia, you will look at the policy locator at least quarterly and report annually to the commissioner, if that makes sense. And they know the policies are there. You've just got to find them. And sometimes, I'll give you one idea that the company name had changed 3 different times. And the only way that we found it was an automatic bank draft on a checking account. And we found the checking account. We didn't know who it was being drafted for or what it was being drafted for, because the name didn't match anything we had. But we finally found it, and there was $150,000 in a policy that was in place at that time.
Thank you.
All right. Senator Steele, do you have a question?
I do. Thank you, Mr. Pro Tem. Chairman, thank you for the bill. Interesting that you used a couple of examples of policies that were universal life. You and I talked a little bit about this. So when it talks about on line 38, policyholder has the right to beneficiary protection. You include your fees, insurance deductions, et cetera. There is a growing industry segment that is selling universal life as an investment type of product, where the fees in the management of the policy often can exceed the value. Mm-hmm. And so there's no accountability for people writing these policies where they can charge exorbitant fees without any regulation or really any guardrails to it. And in the case of several people in the state of Georgia are defrauded the entire policy value because they're drained empty because of said fees. I know your bill doesn't speak to that directly, but that line 38 really speaks to that policyholders, they have a right to protection. What protections are there for consumers that are buying these products in good faith as an investment, but then after just a couple of months or years, then they end up being zeroed out and their entire investment is absorbed due to the management of the product, and then it's just wiped out.
Okay. I'm gonna probably take you to line 30, is the policyholder has the right to illustrations. This particular well, let me address. First was Universal Life that came out, the first version of Universal Life. If I showed you page 3 and 4 of this contract, they should show at current rates and at guaranteed rates that if you pay no premium or if you pay premium. That's how you monitor a policy. It would say it will run for 10 years with no premium. It'll run for 20 years at current. So it at least gives you that there's more than just this one page to most Universal Life policies. First generation Universal Life policies were at a time when interest rates were high, and you have to really monitor them very closely because interest rates came down from what they were projected. I will call Gen 2 of Universal Life had premium guarantees. This particular product, because I sold it, had a premium. If he paid it to age 65, it was paid up from a standpoint of death benefit and benefit that was there. So the agent and client should get this annually, and it usually will show, here's your current, if you how long it will run under current, guaranteed, how many years it will run with and without premium. Here's why I say this. When they cut the agent off, and I'm working on 3 right now, they've said, how long will this run? And without this and without some assistance, they're lost because it's a more complicated product as far as that portion. So what I see is this, is that I like, for me, where there's a guarantee, I want guarantees, but if I don't have a guarantee, I've got to have a report annually to be able to evaluate the status of the policy, if that makes sense.
It does.
And like I said, there's variations of products, but when the company turns this off from the agent that sold it or anybody and says to the client, you're on your own, that's where I see this as really wrong. And if you look at this, I would say this is that if you wanted me to, let's say you bought a policy from someone and you wanted me to be your agent, whether I represent that company or not, you should be able to assign an agent to represent you just like an attorney can represent you, and he doesn't necessarily have to work for or whatever. You need professional guidance as far as that. And if that, let's say I'm dead or I'm retired or whatever, non-active, you need to find somebody that can help walk you through these processes. I'll give you an example. My mother was 96 years old. We didn't expect her to live that long, but we had to monitor her policy to make sure we were paying the premium to keep the death benefit in place. And without and I was pulling annuals because I wanted to know where I was. I don't know if that had answered your question, but I gave you a lot more probably than you asked for. But 30 is really where I would go. 38 is dealing with the beneficiary being able to find the policy, that there is a policy in place. And that's where I see the ability to find that policy. People don't realize it. And what Senator Kirkpatrick, you said 8.5 billion? 8.8 billion in unclaimed. And some of that is life insurance policies that they can't find just going to the state.
Thank you.
Okay.
Senator Merritt.
So, yeah, this is a similar question. Maybe, you answered it, maybe not, but my concern is, will this cause, this is administrative costs, because you have to go back into the database. That's one thing you have to report. So there's some workload to your company.
Oh.
Does that get passed on to the actual consumer, or the administrative fees that it's gonna require?
Where I request a illustration or we call it reprojection. I said, tell me how long this policy will run with no money, with the current premium, or what kind of money do I have to put in it to keep it, let's say to age 100. They don't charge for that, but what they do, they cut me off where I can't even get that information. That's why I think that's wrong, is that if you wrote the policy, you should be able to get it. But then, even if you're not one of their agents, I should be able, with the authorization of the insured, be able to, you follow what I'm saying, be able to, if you call me and said, hey, I've got a policy, my agent's not in business anymore or whatever, somebody should be able to represent you. And that's the part that I think is critically important. is to have representation. And that's why I look at this. When I get cut off, I'll be honest with you, it does not make me happy, because I feel like I have a responsibility to my client. And I'll be honest, life insurance makes a difference in people's lives. It makes a difference whether they keep the house, they educate their children, and I believe it's an important part of our whole structure in that respect. I will tell you that when we ran this before even this, some of the companies said that, well, just to check the Social Security, or excuse me, to check the policy listing for the National Association is going to cost money. Well, yes, it does, but that's a part of your responsibility, in my opinion, of doing business. And I don't buy that, because the National Association recognizes it. This is all the commissioners recognize it, but they has to be done state by state, if that makes sense. And so what we're saying is that if you do business in this, you just simply said it. If they get a death benefit notice from Social Security, they have to do it under the law. But then if they can't find the beneficiary, they send the money to the state.
Okay. So what you're doing, the work that you're doing, you're taking over on their behalf.
Right.
My question is, just doing that and taking it over and doing all the administrative stuff, will that cost them more? Or
For my clients, I don't charge any fee from that standpoint. That's just what we call as an ongoing cost of service to the client.
Okay.
And so that's what we do. And I mean, here's the part about it. You sit there and said, hey, we may can buy something cheaper. Don't know, it depends upon health. But what I see is this, and Senator Sean Steele, I'll get it right, mentioned Universal Life. And Universal Life is a very interest-sensitive product that needs monitoring. It just does not put it on hold and let it run. It's got to have a monitoring to know where it's going and what it's doing. And that's why this also is very important.
All right, we got one more question, and then we're gonna see if anybody wants to speak to the bill. I don't know if the sign-up sheet got put out or not, but Senator Hodges.
Thank you, Mr. Chairman. Mr. Chairman, what rights do beneficiaries have in Georgia? I know that I've seen several times where somebody would have a beneficiary die. Beneficiary may not have known they were beneficiary to a policy. And so do they have any rights? And if they don't, should part of your bill, if you're asking to be the agent and keep up and have information, I mean, should you also then keep up with who the current beneficiary is and make sure that they get what's due them if your client, the owner of the policy, dies?
Normally, in a life insurance policy, you have, I'm going to call 3 people that are involved, or 4 if you count it. You have the company, you have the owner of the policy, you have the insured, and you have the beneficiary. Right. And technically, there's a 5th, which is a contingent beneficiary. Many times we will use a contingent beneficiary, which could be children or could be the estate. I don't like the estate. I would rather have it to a person, if you will, because then we tie the money back up. Any beneficiary designation passes through and bypasses probate, which is what I'm attempting to do most of the time. The newer policies and new applications are asking for Social Security numbers, addresses, and information that were not asked, I'll say, 5 and 10 years ago. We're much better at that. But the other part is we've got technology today to find people that we've never had before too. And that's the part that I think that, how do I say, having this we have the framework of the National Association.
Does the beneficiary have the right to be found? I mean, is there an obligation on the part of the insurance company to find the beneficiary?
No, not that I know of.
So
And so the beneficiary, to your point, Senator Hodges, the beneficiary doesn't even necessarily know they're the beneficiary.
That's right.
They have no rights within the policy. It's
Right.
between the owner of the policy and the
The company.
insurance company, and the beneficiary can make no changes to the policy,
right.
can make no.
No, I get that.
No.
But
So-
after the owner or the insured, say the owner and the insured usually the same person, usually. If they die, then the only person that's got any standing is the beneficiary. But they don't have any rights to be notified.
They really have to
Nobody
file
owes them
a
anything.
death claim to get They have to file a death
They have to
claim.
file a death claim.
I get that, but if they, okay, but,
And understanding if they don't file it, under the current Georgia law, they have to match it against the Social Security death benefit list, and that money, if they can't, they don't. The company. And so they don't have a beneficiary
there's any,
that they know about or can find, that's
test-
there.
other
The money goes directly to the state.
All right, thank you, Chairman.
I'm sorry.
Is there anybody, I don't think we got the sign-up sheet out, so, Mr. Potter, you want to speak to this bill? I will. And I believe you represent State Farm, but state your name and your law firm and
All that stuff.
yes, sir.
So I'm not positive I want to speak to this bill, but I am here and I will. I'm Bobby Potter. I do represent State Farm here and also represent the American Council of Life Insurers. Most life insurers are members of the American Council of Life Insurers, including State Farm. What's been discussed is a lot, and some of it is deja vu. I've had part of this conversation with Senator Harbin, now Chairman Harbin, many times over these last half dozen years or so, something like that. Let me respond to this in maybe three buckets. And I saw the sub here when I came up. I was looking at something before that. But the first is the thought of the policyholder going and picking an agent because his agent has died or is no longer there. That, I think, is a foreign concept to the whole process of agency, insurers, and contracts between insurers and agents. I think that would be true with State Farm. It would be true with independent agents like the chairman and this chairman that would have contracts with various insurers. So it's that they're bound by that contract. The policyholder has bought that, but doesn't have has that contract that bought from that insurer. But for the policyholder to go pick another agent and say this agent is mandated by the state of Georgia to have a relationship with an insurer that he or she doesn't have, that's a foreign concept. And when I say deja vu, I'll talk about buckets 2 and 3 in a minute, but this part to me is new, and I think it is different than anything I've seen over time. And it's a bit challenging. If the agent, for instance, that sold the policy was a State Farm agent, State Farm would take care of the next successor agent. But under this scenario, that policyholder could go pick an independent agent, his brother-in-law or sister-in-law, and there would be a kind of a forced relationship that didn't otherwise exist. So it's kind of outside the bounds of contractual relationships that are the norm in an insurance agent relationship. An agent that owes obligations to the insurer, this would just be entirely different. So I've expressed concerns relative to that, and that's lines 28 and 29 and 33 and 35. That's just different than anything that exists that I know of in normal insurance law. The second bucket I would mention is kind of part of the deja vu, but that is the requirement for the insurer to send, where is that number? The annual report detailing the status of his or her policy, and insurer shall provide the annual report even if the policy is fully paid. I understand that concept that Chairman Harbin has indicated that will be sent out, but there are some very low limit policies where the profit margin is small, and for the state of Georgia to require that insurer to send out an annual statement that they might not otherwise send just will diminish that to the extent that there may be some insurers that would choose to take their business somewhere else and not sell that policy. So availability may become an issue. That would not be an issue with larger insurers, I don't think. And the other thing I would say about that is, in this realm, there are insurers that sell Cadillac-type policies, and there are insurers that sell less expensive policies that don't cover as much, right? In fact, the chairman mentioned there's a variation of products, and there is a variation of products. But to require all of them to do certain things changes that variation and makes some of that uniform, and maybe not necessarily a good idea because it could impact availability. And then the third bucket I would mention is the policy locator service. We have discussed this before this committee a number of times. There are big numbers, but the folks that provide me with this information indicate a couple of things from that perspective, and that is some of that's been brought up. In terms of the policy locator service, what I'm showing is $13.18 billion in life insurance and annuity benefits have been located for consumers, over 1.17 million search requests processed, over 611,000 matched policies. And the indication here is the NAIC Policy Locator portal works. It's in existence, and it works for Georgians already. The second piece of that is insurers are required, and Chairman had mentioned the Death Master File. Sounds a bit like Darth Vader, but the Death Master File is tied to Social Security. It is referenced in the Georgia Code in 352514. So insurers are required on a semi-annual basis to compare the Death Master File to their policies. And if they identify a match, then within 90 days, Senator Hodges, you asked about what rights a beneficiary has. This may be one, actually, that the insurer is required by Georgia law to try to find that beneficiary. If there's a match, then within 90 days, they're required to make a good faith effort documented by the insurer to confirm the death of the person against other available records and information, and pursue that and try to find the beneficiary. That is outlined in 352514. So that is done and required by Georgia law already. The insurance department is part of the NAIC and very familiar with the NAIC Policy Locator Service. I'm not sure they want to have an annual report from each insurer showing that they have checked the NAIC Policy Locator Service, when that's part of what they would do anyway after the requirement of checking the Death Master File. And the Death Master File and this combination has worked. Clearly there would be an exception from time to time, as referenced by the chairman, but that's the concerns that I would express on behalf of ACLI, particularly the first part with the agent-insurer relationship that is shifted when the policyholder can pick somebody that has no contractual relationship with the insurer.
You have a question, Mr. Potter, Senator Hodges?
So I wanted to ask you a question about your comments about line 28 and 29. If an insurance company sells a book of business to another insurance company, you're saying that the concept of keeping the original agent is foreign to you, is new, is hard? Because you're going to have to pay them residual premiums anyway, aren't you? I mean, you're going to, not premiums, but commissions.
I think,
I mean-
somebody in the audience may speak to that. I think in a number of these cases, the commissions have already been paid. The commissions have been paid as the original agent.
Okay, all right.
The term of art, or the term utilized here, is assist, that the policyholder designates a local agent to assist him or her with a policy.
That's what you have trouble with.
Yes, sir. And
If Marty retires, if he's not around then the owner can say, I don't want the State Farm agent that you just assigned to me. I want somebody else.
Somebody from Prudential, but they could.
I
And
get that.
the chairman equated it to an attorney, but the attorney, pick one, whether it's the billboard lawyers or otherwise, they don't have a relationship with the insurer. That would be different if somebody hires an attorney to pursue something on their behalf. But to require an insurer to deal with an agent selected by the policyholder, that's what I would say is foreign.
But Marty sells a policy. The company sells our book of business. Company A sells it to Company B. Company B can still deal with Marty or not?
Well, in the example
Yeah.
he gave, that company B had a hard time dealing with him. I would say the solution seemed to me to be the policyholder that had the connection with that company
Okay.
can make that request.
Thank you. Any further questions for Bobby? What's your number, Chairman? Yes, sir.
For clarity and just for my correction in my mind, in the first place, if you approach your client in the first place, the question you ask, and the question the company would ask, does this person already have coverage? Is that correct? And beyond that, they wouldn't. They didn't if they had coverage already, they would have to say, was this changed policy or something to that effect? Isn't that a line of question you have to go through in the first place? Not the sale. I'm just saying that initial contact for the first agent even, you would have to inquire as to whether or not does this policy to the company that's going to cover is this a change? Is this a new policy for this person, or they already coverage? There's some questioning along those lines, I believe.
What I gave you as an example has happened, is the company's been sold, and they no longer recognize the agent that sold the policy as the agent to even ask questions.
Yeah.
Bear with me, when you're dealing with older insureds especially, they do not have the mental tenacity to really understand all the questions that are there. And I'm just saying, without representation of some kind, it's very hard. And I work many times with policies that I don't make anything off of. I help the client do the best, what's best for them. But when I can't get information, and I'm not alone, as any agent can't. Just like this, I know that State Farm will not recognize me as an agent with them because I'm not licensed with them. But if I hire an attorney and the attorney requests information or the policyholder requests information, what happens in these cases is that I have to write the letter for the insured has to send it has to go through the situations, and it's just really, it handicaps the policyholder, which shouldn't be punished. And my second part, that it's interesting that we can require them to check the Social Security death benefit list, but it's too hard for them to check the commissioner's list or to respond to that. That I don't understand totally in that respect, because that was the position of the National Association of Insurance Commissioners. And since it's theirs, I think that's how I see that. Okay? I don't know if I've changed positions. Do I get to answer questions?
Chairman Harbin,
No.
it's a little after 5.
I know.
We've got, Senator Steele has another meeting he's got to get to. Do you want, what's your desire? I have let me just ask my question. I'll try to be quick.
No.
I'm a little concerned, if you look at lines 23 through 25, where you define policyholder. So a policyholder can be an individual who is insured under a policy, the owner of the policy, person responsible to pay the premiums of a policy, or the individual designated as the beneficiary. And oftentimes we sell and then you go on to say the policyholder that's been defined there has all these rights. We oftentimes sell life insurance policies on a mom or dad. The beneficiary might be the spouse. They might get a divorce. The spouse is then the spouse is the beneficiary, so then they are defined as a policyholder. Then the spouse can then have all these rights and start controlling the policy. That could, in a divorce situation, that could be very problematic. A lot of times people get divorced and they don't change the beneficiary
Oh, yeah.
for ever or quite some time.
Until death occurs.
Another example is a child could be the beneficiary. They're now defined as a policyholder. The child has all these rights. I just believe we might want to clean that up a little bit. That concerns me, and conceptually, I'm an independent agent like you. I think agents bring a tremendous amount of value to the client and to advocating for the client. I just think we maybe are opening up some unintended consequences with defining the beneficiary as the policyholder when that's not, I don't think, what you really intend. Am I reading it right? Or?
I get it as broad as I can, sir, because of that. If you would like to do this and we'll go wait for our next meeting. Unless you and I and Mr. Potter talk, but I do think this. I think the policyholders of Georgia need to have protection, and there is evidence that you and I should not be limited in what we can get from that person. And I believe this is that we shouldn't have $8 billion in unclaimed money. We need to find a way that goes to the right people. And I'm going to tell you the ones that I personally think are hurt the most. It is the smaller policyholders, like this 20-pay life that was paid from 1966 to 1986, and nobody even knew it existed.
All right, we got one more question,
Yeah.
and we're going to
I
probably.
was just going to say, I think it would be beneficial to have some further conversations before we vote on this, because we know that what's happening now is not working as well as it could, and that's how we end up with all this unclaimed property. So I like the concept, but I think it needs some more work. So
Okay, we'll come back.
yeah.
And
Is
we'll
that okay
substitute
with you?
that.
All right, thank you.
Good, thank you, sir.
Okay.
You and I, it was your fault you had to find $150,000. Wasn't it your fault? You had trouble finding policies?
Thank you.
Okay.
And the insurer had changed, or had been sold.
So we will meet again. Our meeting's on Tuesday, so thank you. We stand adjourned.